Welcome to the Treasury Update podcast, presented by Strategic Treasurer, your source for interesting Treasury news, analysis, and insights in your car, at the gym, or wherever you decide to tune in.
Welcome to the Treasury Update podcast. This is Craig Jeffery, your host today. I'm joined today with Paul McMeekin from Bottomline Technologies. Paul, welcome to the Treasury Update podcast.
Yeah, thanks, Craig, and thanks for having me today.
So for those who are listening, in the show notes, we have some links to the survey report. Bottomline underwrote the B2B Payments Survey report again in 2022. There's a lot of good information, so look there to download the full report. And Paul, as we get started, maybe it'd be helpful if you just give a little bit about your background and role at Bottomline.
Yeah, absolutely. And so, as Craig said, my name is Paul McMeekin. I'm the VP of Marketing for Paymode-X at Bottomline. And so, question is immediately, what is Paymode-X? So, Paymode-X is a comprehensive AP automation platform, and we really target outdated finance departments and those with companies have $50 million to $1 billion in revenue. And we like to think that we make modern AP processes very attainable through our robust product and customer experience. And we have 500,000 businesses on our network. We are a payments network, and we're trusted by 7 of the largest banks in the country. And I use that word attainable really intentionally. So we say automation that's really attainable for your team. And we talk about that generally about how a service makes a transition from check and paper-based processes today. We really make that go smoothly. In our unique offering, in our payments offering, particularly premium ACH, that drives ROI with incredible rebates. And importantly, as you'll find out from the trends in this report, we have thorough fraud protection. So billions of dollars, over $300 billion processed each year with zero fraud on the network. And our vendor network, and we'll talk about the network effect a little bit later on, covers all the bases for the customer. So we'll really talk about day one match when someone comes to us, how many thousands of vendors are on the network, which they're paying already today. So that's a little bit about me. Like I said, I run the marketing for Paymode-X at Bottomline here, and that's a little bit about Paymode-X as well.
Thank you so much, and congratulations on passing the 500,000 mark on the network side. And thanks to Bottomline for underwriting this survey. This has been a great survey. And just some background for those who are listening, when you download the report, you'll see that we had responses from over 800 companies around the globe. So this was a significant research project, a lot of responses across the globe. So, we've continued to run this survey year after year, and, the readers can look and see where we captured longitudinal information. So what's changed over time. So there's quite a few key findings in the report. We're only going to be touching on a few, Paul. As we look at this, some of the themes and items that we'll talk about today are some of the key challenges, particularly around AP. Right? So we have a lot of people listening who are from AP or from finance or treasury. So, what are the top AP challenges? Then we'll look at fraud, which you had already given a little bit of an indication on that at the start. What's going on? Fraud is real. It's growing across the universe here, and that's a top concern. So we'll look at that for a little bit. I'll ask you some questions there. And then finally, when we look at solving for B2B payments, how are companies evaluating? What's the criteria they use? And how do we better define that? So there's a lot of good information that's come from both the research, but also from your experience. So let's jump in, Paul. When we talk about some of the top challenges, many of them center around efficiency. Efficiency is always a big item, Paul. What do we mean by that? Maybe you could talk us through how you think about efficiency, how corporations should think about that.
And prep for this, I was skimming through the report again, and just to really see how big of a challenge it is. And two things probably stood out to me. So number one it was about, I think it was 42% saying timely invoice approval is one of the biggest AP challenges. And the second one was just general overall efficiencies. And there's a significant opportunity to move from paper to electronic. And I think it was 55% of large companies said that's one of the biggest opportunities. Efficiency, to me, maybe different to efficiency to you. And so when I speak with clients, the way we advise them to think about efficiency, it kind of starts with procurement and ends with payment, and it takes in all that invoice ingestion. So if I think of what a manual process may be like today, so let's say they set up the procurement, they get the PO out, the vendor invoice comes in, right? And if let's say they're a dispersed company or they're a manufacturing company with different plants, things like that. So invoices may be received at plants, it may be received via email, maybe paper-based. And the AP clerk may manually enter and code each invoice into the ERP. Then the invoice hard copies get delivered to the plant managers for approval. Then the AP clerk batches all these approved invoices up, sends it to HQ via FedEx, which may take, 7 days perhaps, right? The batches get, the batched invoices get received at HQ. Then there's a file clerk who reviews these invoices in their ERP for accuracy. And then the invoices get sent to storage. Then the invoice gets posted to the ERP for review. And then then they create a check print file. Then a week later, depending on the check run, the checks get printed and pre-sorted, then they get mailed, and then, a week to 10 days later, the vendor gets paid. That's a very simple fly through of all the different steps a paper-based process may take, and it's incredibly inefficient. So if you break each one down, it's relying on a couple of things. It's relying on someone accurately entering information. It's relying upon speeds, like the people are at the location. There's no approval queues. So if someone's missing, I can step in as the assistant plant manager and approve that. So that's the problem we kind of grapple with our customers of how do you take this incredibly complex and terribly inefficient process and work with your people to digitize it and automate it. And so getting those approval workflows down correct are super important. So I may have a level of approval based on spend. You, Craig, you may have a level of approval based on spend and location. And so building those type of workflows into the approval process is super important because it helps them go much more efficient. And really what we come down to, efficiency is eliminating what I would say is wasted time. And that old adage of time is money is really important. So if you think of why is it more important now? And so what we're hearing a lot of, particularly in the last, 3 months, especially in the United States, that money is no longer free. And so that has huge implications across efficiency. So your cost of capital, your speed to payment, all those sorts of things are very, very important. So when we think about efficiency, we really talk about improving the end customer experience. So there's probably 3 things which we hear a lot about. One is speed to payment. So allowing customers to issue a payment and from anywhere. And it includes all those things prior to payment. So that invoice ingestion all the way through approval workflows, everything I mentioned there. The second one is kind of the embedded experience. So kind of the API driven. They don't want to go through multiple systems, which increases mistakes. They want to be able to click and approve and pay all from one system. And also having this customer first notion of the value proposition for paying and also accepting virtual card, ACH premium payments needs to be super strong. And so as we've seen inflation skyrocket in the last 12 months, we see more and more customers thinking of 2 things. One is I really need to make the best use of my people and have them working on super important stuff and not manually entering things into multiple systems. And also I want to be able to generate rebates back and offset some of those costs that I'm dealing with. So that's kind of what efficiency means to me. And as I was looking through the report, it's cash flow all seems very important. So I was reading online earlier this week is that, 83% of small businesses fail as a result of cash flow issues. And if we can improve the invoicing, improve the invisibility invoicing, it also helps your suppliers and your vendors. If you can get cash to them in a reasonable manner and they're not having to wait, 35, 50 days for payment because your invoice is stuck up for 15, 21 days, it helps your partners as well.
Well, you said a lot of really, really interesting things there. Your idea, as I was listening about efficiency, seems very much about end to end, the entire process, especially when there's all these manual handoffs, manual paper items. And it's interesting because in the survey, and I think sometimes we think about efficiency as, is there automation? And is there automation on the handoff part of the process to the other party? And that's not all, right? So if we looked at the research showed that 70% of large businesses make over half of their payments electronically. And that sounds like good success. But if all the back end is baling wire, paper cuts, moving items, it's not anywhere near what you were describing as efficiency there. So I like your comprehensive definition of that. Paul, you mentioned your payment network surpassing half a million members. When we think about the value of a network, what's the network effect? I'll describe it a couple ways. And this is not meant to be I'm asking about it, so it's not really a commercial about Bottomline, but let's talk about the power of networks, because there's networks and there's networks of networks, everything from Swift to Paymode-X to other networks. But when we think about what's the network impact, we tend to think of it this way. Maybe you can fill in some additional thoughts. There's how big is the network? What can the network connect to, right? That's what, like the network of networks. So that's sort of the same question. The other is, what can you do on the network? Is it a single function? Are there multiple functions? And I think you've alluded to some of that. But how do we think about the network effect and how that impacts how we solve for AP challenges?
Going back to efficiency, I think the network effect makes your work life much more efficient. If I kind of think through of the network effect examples, right? So even outside of payments, the close one probably e-commerce or eBay or Etsy or Amazon, when Amazon were building their marketplace. So even like I was looking for concert tickets for this weekend, and I was looking at StubHub and Ticketmaster, and I was thinking of like they are like networks that bring buyers and sellers together, and thinking through of Paymode-X, if like the value of the product of the service increases when more people use that product or service. So I think the number one thing is the sheer volume of people on the network. So we have half 500,000 members who can get paid digitally, and we have an extended supplier network. So that's kind of like that network of networks where they're not on the network, but working through partners, we can pay up to 1.3 million different businesses, right? And so the way we think of the network is in two ways. You have to bring value to both sides of the network. So value for payers and value for vendors as well. So we think, payers rebates is a very strong message of like, how do I get money back in my pocket? So with interest rates rising, there's all these working capital benefits of getting rebates back, but it's not just rebates, right? And so what we think of is there's probably three things. One is, I call it optionality or single payment file, going back to efficiency. Like if you give, Paymode-X or whichever network of choice, like one single payment file for your card, your ACH, your check, even check, right? If you give your network of choice, like one single payment file, and then they can work with your suppliers to simplify their AP process and maximize that supplier acceptance. So from day one, you'd want to look at how many of the vendors are on the network in your file. So someone comes to us, there's 35 to 40% of the suppliers are already in the network. That kind of speaks to the size of it. So you don't have to go through enrollment. You don't have to set up bank accounts, things of that nature. And the second one is embedded technology. So when we speak to both sides of the network, both payers and vendors are always looking for the embedded payments within their software. So can I send the invoice through the network? Can I accept payments through the network? Can I receive remittance data through the network as well? And I think that the big one is customers will talk to us about paying a premium for security and integration too, right? So that's generally, is the network super secure? And that benefits both payers and suppliers, of course. Also, is it integrated into my ERP of choice? Whether I'm using Microsoft D365, which is broadly applicable across many industries, or something focused on a specific industry like MRI or within real estate, does my AP technology, integrate super easily with my ERP of choice? So that's when we talk to vendors, when we talk to payers, it's a very rebate driven story, but also those ancillary benefits as well to the network. Then for vendors, what's the value to the vendors in the network? So it's also about automation, reducing those those tasks as well, those tasks they have to apply the cash to the bank account. So what we talk about when they say, hey, why would I pay to accept a payment? And so one of the benefits we talk about, especially now in this interest rate, we reduce day sales outstanding. This higher interest rate environment we're in, which is probably not going to go away in the near future, there is a true cost of capital. So that's kind of like one, and that's probably a point in time thing. But then when we talk about if you're receiving 5,000 payments a day or 5,000 payments a week on all these different formats, it's really hard for your AR staff. So that whole efficiency we talk about from the AP side, on the AR side as well. And one of the most under-tapped benefits to the network, I think on both sides, is data. I think particularly for data, it could be king for the receivables team, but the way they receive the data today in all these different structured or unstructured formats and perhaps structured formats, pulling it all together, giving them reports on which of their payers are paying when, who to chase, real alert systems that can bring value to the supply as well. So I think the biggest things to network effect is obviously the size of it. It's just there's more people to pay. It makes it easier for you from an efficiency standpoint, and also from bringing value to both sides of the network as well. So when we do vendor enrollment, we don't bash them over the head to take the payment or hold the payments back if they don't accept the digital payment, but like do it in a manner which benefits you in the long run.
The size of the network, I think you described that really well on the items about what you can do on the network. You start talking about sharing data and how that's tied into efficiency, right? If it's built in, and if you're doing a bunch of one-by-one connections with your trading partners, you do 100 trading partners and there's 100 different formats of data. That's a massively complex integration, right, to get the data to come in. But you're saying that the power of the network, I think I was understanding you're saying is that there's power in the data and power in the consistency of getting it from multiple parties. There was one other thing I wanted to ask about that for the transition to the next section, but I also wanted to go back to a couple of definitions. You had mentioned virtual card and premium ACH. A virtual card is, instead of using the same physical card number again and again, it's as a payer, you provide a one-time use card for a single amount. It goes to the other party, and then it disappears. It's not used again, or it's not used again by that party, or it's not recycled for some time. And so it's a way of using the card network to make a payment and extinguish the ability for using that for fraud, or making it extraordinarily difficult to commit fraud on a number that disappears. Maybe to explain premium ACH, maybe it'd be good to contrast that to regular ACH. What's the reason for premium, or how would you contrast those two?
That's a great question. So if I just want to get paid from ACH, for example, like you get your faster electronic payments more than check, you get your payment notification via email before you get the payments, and there's mitigation of risk, right? There's no negative, like there's no less security because you use some basic ACH on the Paymode-X. So what's the big difference then? So I think for us is you can request the payment status online. You can track and trend your largest customers through like a My Payers functionality. And this is what I was talking about earlier about the data, where you can really see which customers are paying, when they're paying, what trends they had in the last 3 months. I think the big difference is being able to share critical documents. So you can share your W-8s, your W-9s with your payers. There's different types of data you can dive into. And there's also the ability to submit invoices electronically, right? So that's like a premium function. So you can track the status. You can prioritize customer follow-up by invoice, age, or amount. So really putting the power into the hands of the AR folks of like, okay, I can prioritize this customer and say by age. So to really reduce your DSO, you can prioritize that type of follow-up. I think that there's a couple of other ones where there's kind of unknown unless you're on the network. One is we call it Vendor Connect, and it allows payers in the network to find your business. So if I'm looking for something in particular, like I'm looking for landscaping or plumbing services, and we may have those in the network, I can go and find those in the network. So if I want to find someone already, and then we can have vendors who advertise in the network too. So it's almost like a catalog function almost. If I'm going using an outdated term. So those things are those are the big differences. And I think the biggest one is the data. And our customers tell us being able to prioritize the invoicing, receiving that data in a format we can use. And each line item by itself isn't amazing or astounding, right? But the whole package of the things I listed together there creates a big difference. And that's why people pay to be on the network.
Now, the last network effect will bring us into fraud. Now, you had mentioned what are some of the elements of the value of a network. There's other partners are registered, they're set up, they're onboarded. That's there. And that's been one of the most significant challenges with fraud in that, every time there's a change, there's a big possibility it's fraudulent. And the power of the network is someone's looking after that for the company. Maybe that's just a thought leading into it as we look at fraud and AP losses from the research. We certainly saw that AP losses are real. They're significant. They're growing. They're hitting larger companies more than smaller companies. It was a little over 20% of larger companies experience one or more losses. Smaller companies, that was about 11%. As you think about that, we can make hypotheses of why that is. Criminals have been more intentional about targeting larger companies because of the larger potential payout. Now with more automation, they're just naturally catching smaller companies. That could be a reason for that. But as you look at this increase of sophistication and success on the criminal side, are you finding this is to be still surprising or just same level of concern? And how do we think about moving past this or reducing this?
I think that the biggest surprise for me was the amount of large companies who had suffered at least one fraud attempt, right? And nobody's immune, and it was all types of different fraud. So I'd encourage the listeners to check it out. So I think one of the data points which kind of shocking to me was that 8% of the breaches or compromises were connected to insider or employee fraud, and that was kind of one of our new questions in 2022 here. And so it continues to surprise since the question, and it's also a big level of concern. And so you're only as strong as the weakest link. So if you are on a network and we validate every single vendor on there, and one of the big efficiency points, if you go all the way back to the start, was validating bank accounts to your suppliers. And so, and as you said, once a change comes through, is what do you do? And so what we do from a network perspective, just to share some of the things we do. So there's phone and email analysis. We look at, what phone numbers, what emails are there. That's the super basic stuff, right? Then there's the actual document review. Then there's the shared threat intelligence. So we connect into all these different external sources. Big banks use this. We have our own proprietary intelligent business data. We do digital identity verification. So that's sometimes two-factor. Some of our customers complain about that, to be honest with you. Say, why do I have to have, two-factor authentication? And then you explain it to them and they're like, oh, okay, I kind of get it. And I think two-factor authentication is commonplace for everything now. So maybe that complaint will go away. Then there's, device fingerprinting. So where in the world is the device coming from? We layer in behavioral analytics, and this gets super sophisticated. When are they doing the transaction? What location is it coming from? Even the time it takes to go through and enter payments in. So if it's fraudulent, they type in a bunch of words very fast, where if it's a human doing it, there's a time expected for someone to do it. So, and then we have the OFAC list, and there's the digital bank authentication. We go through blacklists and proxy IPs, and those are the things which they tell me I'm allowed to talk about. And so there's these multiple layers of security. And what I said earlier is you're only as strong as your weakest link. And so every member on the network is treated the same, whether you're a $10 billion company accepting payments, or you're a small, landscaper accepting payments. You go through the same rigorous process. There's no big company process and small company process. All the things to get onto the network is the same. And it takes a a lot of time and effort to keep the network fraud free. So going back to your question of, it is a big concern, and we have spent, I don't know I actually don't know how much we spent, but I'm sure it's significant millions of dollars keeping it protected. And it's always staying one step ahead of the fraudsters, because as you said it right, it's become much more sophisticated, and the insider fraud threat is real. In the report, there's a nod to working from home, and there's this hybrid work we're living in, and I have a big concern, not for working from home because I do myself. It's those bonds you have, and if people are handling money, or if they're in the office and someone's not looking over the shoulder, but there's people around you, right? And there's that, whether you're at home and there's less physical barriers of people standing next to you, and there's less like relationship strength if you like new to the business, and maybe how to build relationships. So I think this hybrid work and moving to work from home is both a huge benefit to the economy and people's lives, but also a huge threat and risk to AP process. And I expect that insider fraud threat to continue to grow in the next few years because of that strange working from home environment, which we're in. It does increase the risk.
Really good points there. This idea of using networks, using tech, thinking through the human element of reducing fraud. A lot of good points you made. Certainly some of that comes from the research, and some comes from your experience and how people are thinking about it. So great topic to cover. I do want to shift to the solving section. So what's the evaluation criteria that we use for evaluating new automation solutions? Those are some of the things that we asked. How do companies look at different technology tools, solution sets? Now, Paul, as you know, quite a bit of it's focused on efficiency. You have talked about some of those already, but what did we learn through how corporations, AP groups, treasury groups are evaluating these types of solutions? What are they really seeking?
This is where like the data and my real life experiences kind of divert. What the data tells us is that the top 3 decision criteria for making a change is security, ease of use, and breadth of functionality. And when potential customers come and speak to us, they just assume security is taken care of. So it's not like they don't come to us because of, you have zero fraud, or like, hey, what do you do for security? It's never the first question. It's always in there. But when they typically come to us is because they have a business pain to solve or business problem. They talk about efficiency. They talk about, we want to pay our vendors, digitally. And security is like a 3rd or 4th on the list. It's always important, but it's never number 1. And so I found it fascinating that the security is the number 1 thing that they look for. So maybe it's like hey, we really, really care about it's number 1. But when we speak to vendors like Paymode-X, it's like we have to assume, and we don't lead with that. So I thought it was kind of fascinating, the difference between like the real life and the data there. And this is the mindset we're in. So I was trying to rationalize like the data to the real life. And if you're answering questions around fraud and fraud losses, maybe that comes to the top straight away. A little bit of confirmation bias almost. So one of the things which I did see in the data and in real life is this desire for embedded banking has grown. So having that technology inside like the platform you use every day is super important. Being able to make payments from the same platform as your invoice solution is super important. And that's what we see on a day-to-day basis. But like I said, the data says, security, ease of use, which we talked about a lot at the start, making the customer experience better, not having to have multiple clicks through multiple systems, and breadth of functionality. And I think breadth of functionality comes in 2 or 3 ways. One is like I get the procure to payment functionality, all the features I need, particularly if I'm in a specific niche like real estate, like there's some very specific things you need in real estate or construction, for example. All my needs are taken care of there from invoicing, and from a payments perspective, the functionality comes to like all the different payment types and being able to give, one single file to the network of choice, and then the network of choice being able to pay your vendors with that one single file. So it was kind of fascinating the difference between the data and like the real life experiences.
You had mentioned the word embedded. I can't remember if you said embedded payments or embedded treasury or or banking, is the value for embedded, let's say embedded payments, right? It's a deep integration into another system. Is the value there efficiency? Is it control? Is it, all of the above? How would you weight the, why are we seeing that as value?
So that's a really good question about embedded. And I think the answer is all of the above. It's like flexibility, choice, and control, right? So just recently, October 27th, Microsoft and US Bank had a good announcement. So the headline is, US Bank announces its first embedded payment solution as part of a Microsoft collaboration. So what does that actually really mean? So they were one of the first banks to directly implement the payment tool, and it's the powered by Paymode-X, they call it US Bank AP Optimizer. And that's within Microsoft D365. And what they saw is, they as in being US Bank, is this direct integration into the D365 ERP makes it easier for businesses to click and start using capabilities quickly. So there's that speed and efficiency. And they have several more capabilities in the pipeline to embed additional payment tools within workflows across all of the Microsoft platforms, including Microsoft Teams and the Microsoft Power Platform. So it's not just AP Optimizer with Paymode-X behind it, but they really talk around, they want to meet the clients wherever they are in their digital journey. And so bringing payments to businesses in a way that's instant, that it's embedded and connected to technology that they already use every single day. So it's not going outside of the system, reducing fatigue or the portal fatigue, and really talking around embedded payments. It's around enhancing visibility, delivering better experiences, and also reducing risk as well, risk of mistakes being made. So that's kind of why US Bank and Microsoft teamed up in this collaboration. And like I said, they announced it on October 27th. And they have much more in the pipeline outside of AP Optimizer, but it's a real life example of two juggernauts in the industry coming together and really putting embedded payment technology at the heart of what they do for their customers.
Yeah, thanks for that. I'll look for that article. We certainly talked about efficiency as one of the top drivers, or the top driver for what people do, that, and security. We also asked questions about what were the most inefficient components of your company's financial operation. And just briefly, I wanted to mention cash flow forecasting. This came up as one of the top items, and we've seen the emphasis on cash flow forecasting show up in many of our surveys. They spend more time on it. They need to improve it. They would spend even more time if they had it. They want to invest in it to make it better. And this covers both difficult financial times as well as more stable times. It does get a bigger emphasis during difficult times. Is this does this tie into the questions about visibility and data that you're talking about? Is this going to be solved anytime soon? Is this going to be improved anytime soon? What are your thoughts about the cash flow forecasting component?
Most organizations I've talked to, or we collectively, they don't have instant cash flow forecasting, which means they don't have visibility and they don't have control, right? And that's all the things you need to optimize your working capital for business growth. And business growth is the positive sense. When things are good, how are you effectively using your cash to grow the business? And as we likely head into a recession, our growth in the United States is slowing, and every top predictor says that a recession is coming. And so that, where's your cash and how you make use of it is super important as well, right? So you don't have the visibility. You'll likely have an inaccurate cash position. Are you paying things that you can't actually afford from a cash perspective today? And when you think of medium enterprise businesses, or if you have multiple different sites, so when you're juggling different divisions or business sites and taking or extracting that data from different legacy or back office systems, or managing multiple bank accounts, I have a lot of I don't know if forgiveness is the right word, a lot of grace for people in those positions of not being able to provide an accurate real-time cash position for the companies. So that's kind of the negative side of it. And so once you get that visibility and control, They can calculate their cash position with, efficient liquidity management. And so what does that mean is like they can set up automated sweeps and cash pools. They can improve the cash management position that way. And there's much more efficient reconciliation, which gives them much better visibility into the cash flow forecasting. So it's not just like from a payer perspective, but also a receivables perspective as well. And so being able to have that true visibility gives them control of when they can make payments and when they, like, what's their DS from a making payment perspective, what's their DPO, the days payable outstanding, what late fees are they incurring? And so one of the big things when people start working with us is like, we get hammered with late fees. So being able to reduce those late fees and improve your cash position is super important. Then from a recipient perspective is, cash application, getting the cash into the bank as fast as we can. So it's not just receiving the payment, it's applying it to the bank account as well. I mean, I think it's one of the biggest opportunities we have as an industry in the next few years is helping people understand the cash position much better.
Yeah, excellent. Thank you so much. As we wrap up this discussion about B2B payments and the most recent survey, any final thoughts you want to leave with the audience besides read the report, look at the link below?
I'll plug the report, man. It's always fascinating, right? And payments is one of these industries where it's always changing, and there's always, even though it's the 6th year we've done it, there's always something new in there. So we add we've thrown a few different questions, and even some of the questions we've had in there for a while of just looking at the difference in fraud. And when I speak to people, it's it's kind of good for your own knowledge, but also what are your peers doing? What are they investing in? What do they think is important? Are you different? Are you the same? Is there a reason? Everyone has a unique environment, but if you're spending a whole bunch of time, if your fraud rate's much higher than the average norm, you need to be bringing in some experts. And if your fraud's much lower, you haven't had any fraud events, that's, good for, you should celebrate that, right? And so I think it's just good for general knowledge, also good to use internally as well and shop around. So it's never boring. It's always rock solid, and it's always very interesting as well, right? So I'd, encourage people to read it, Craig.
Thank you, Paul, for your comments today and this discussion. This has been very encouraging, helpful, and informative, and also to Bottomline for underwriting this research for 6 years.
You've reached the end of another episode of the Treasury Update podcast. Be sure to follow Strategic Treasurer on LinkedIn. Just search for Strategic Treasurer. This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.